Welcome back to the Guide to Buying Your First Home series. Today I'm excited to have with me Jay Sondhi from Guarantee Mortgage Corporation. How are you, Jay?
Great. How are you doing?
I'm doing great. Thank you for asking. So today I just kind of want to talk with you about the mortgage process and where it comes in the home buying process. Is it good to do it before you find your first home or after, and all that kind of great stuff. So are you ready, Jay?
Yep.
All right. So can you just tell us how you got started in the mortgage industry to begin with?
We got started by accident. One of my college friends, frat brother, I guess you can say, was working in the mortgage business as a mortgage banker, and I was in between jobs because I was part of the .com boom or bust thing, and he said, "Why don't you come and work with me over in mortgage banking?" And I was at first reluctant because it was all commission, but I thought I'd probably do it for 2 years, but now it's been 12 years.
Oh, wow. And how did you get with Guarantee Mortgage? How long have you guys been around, and what kind of loans do you specialize in?
So I started working here at Guarantee Mortgage back in 2008. And that was when my last bank, I was a mortgage banker for a long time, wholesaler. And when my last bank, IndyMac, went bankrupt, I came over here to Guarantee Mortgage and hung my license here and started doing loans for on the retail side of things. So Guarantee Mortgage was my best client at the time. They were a big, gigantic broker, and it was just a natural selection. So the day that we went bankrupt on the bank side, I already knew where I was going to go.
Nice. And as far as Guarantee Mortgage, where do they offer services? Is it just in California?
We're only licensed to do loans in California, but I think that's a good thing because we want to kind of keep our reach local. I try not to do loans outside of the greater Bay Area, unless it's like for a refinance. But refinances and all kinds of loans, we're good to do loans in all of California. But for the purchase stuff, I'd like to stay kind of local.
Well, in thinking about some of our listeners may be in California, may not be in California, and so that brings me down to a later question, which we'll talk more about, which is, when you're picking a mortgage lender, and where you should pick them, and maybe not if you are in California, maybe not in New York, or vice versa.
Right.
So, can you elaborate a little bit more where in the home process? So let's say, I found my dream home. Should I have already talked to a loan consultant, or mortgage consultant, or should I find my dream home and then go talk to my mortgage consultant?
Oh, you should probably get approved for the loan first. Most of the time, I find that realtors won't even take you out or write offers for you unless you have the pre-approval letter. And you don't want to get into a situation where you're in contract where things are running fast and then you find out that you have some problem with your credit that you didn't know about. So when I first started in the mortgage business a long time ago, we ran my credit just to see what I was looking at, and I found out that I had a collection on my account for a dentist that didn't receive all the money that he was supposed to get from my insurance agent, and so it was a $200 collection. It was kicking my credit down by a lot, and I had no idea about it. So that's the kind of thing that you may find out about during the pre-approval process, and you'd rather get that stuff figured out before you're, in the heat of the battle,
So, that's a really good point. We might have things that might bring us back, and with this market getting as, more competitive as the days go on, having that pre-approval letter and knowing your budget. Let's face it, you need to know what price range to look in, right?
Right. You want to have that whole. I think the most stressful thing about buying a house is the whole money issue. How much you're going to put down. Usually, people are worried about how much cash they're going to need to bring in to close the whole thing, and what the payment is going to look like on a month-to-month basis. And once you've figured out what that's going to look like, it makes it a lot easier to go out and look for things with as little stress as possible.
And so your job to help the homeowner move forward as a mortgage consultant would be to get them pre-approved on the front end of things. Then they would find their house, and then you would move forward with them in the loan process once they have found their house, or is that out of order?
Nope, that's about right. I think there's a big difference between pre-approval and pre-qualification as well. So
That's a good point. Can you dive a little bit more into that, Jay?
So with the you'll hear this term called pre-qualification, and you'll see online that there's a pre-qualification in minutes or a couple seconds. You'll get a free pre-qualification, and the difference between that and a pre-approval is that a pre-qualification basically says you basically have somebody talking to you and finding out how much income you make, and they're basically taking your word for all the stuff that's going to be part of your loan. And then they say, based on that, you'll be able to qualify for X amount. That's basically saying you're pre-qualified. Based on what you told me, you're pre-qualified for this loan amount. But that doesn't really hold much water when you're writing offers. What they're looking for is a pre-approval letter. And what the pre-approval letter that I write says is that I've reviewed all of your income, your assets, and your credit profile, and I can say that you're definitely approved for the loan as long as we get appraisal comes in at value and everything.
Okay. So they would already have their budget in mind, and in that letter, is there a budget, or do you privately discuss that with, not the budget, but the price range, or do you privately discuss that with the homeowner before?
Well, usually what happens is the realtors will ask me to write a new pre-approval letter for every offer they write. So in the beginning, I generally talk to the client and give them the high approval amount, their pre-approval amount, their max, and we keep that to ourselves. It's because realtors always want to know what the highest amount that a buyer can use. Lots of times what you get approved for and what you want to spend are two completely different things.
Right.
Even with today's very prudent mortgage market, I think you can still borrow more than you want, or more than will fit your budget. So it's always going to be a personal thing. So what I always try to do is get that mortgage payment to be where the client wants, and to have them fit that into their budget. And a lot of times they'll find that the price range that they were thinking about may be a little bit too high because their lifestyle includes going out to eat or spending money on fun things, and once they see what that payment looks like, they realize that they're going to have to make some budget cuts.
And then you had mentioned before about maybe having things in your credit and that's why it's a good idea to go through the pre-approval process before you find your dream home. And do you go through that process with the client, or do you refer them to like a credit specialist?
No, I go through it with the client. Lots of times I can tell somebody what to do with their credit profile just by looking at balances and whatnot. For instance, if we see that there's a judgment or a tax lien on the credit report that may have been taken care of but is not reflected on the credit report, I can give guidance to the client on what to do to get that cleared up. And we have a lot of tools on this side that we can use to get credit scores refreshed quickly. Generally, the credit bureaus would take anywhere from 30 to 60 days to update their system, but we have things that we can do on this side to make that quicker if we need it.
Okay. So you guide them through that process.
Right.
Okay. So, going through the process, what do you think are the 2 to 3 most important tips you have for the couple or the new home buyer who is looking to know how much they pre-approve for? Is it, having their credit in line? Is it, what region they're in? What do you see as the best 2 steps, 3 steps that your client could take to move forward?
I think one of the pre-approval process these days with all the regulation and the rules that have been put on the mortgage industry over the last 4 or 5 years really make it simple to figure out. So basically what I usually start off telling the client is that it's not really rocket science as far as what you're going to get pre-approved for. There's basically a speed limit on your debt, your monthly debt outlay, and that speed limit is 45% of your gross monthly income. So usually that's, that you can figure that one out pretty easily about what you're going to get pre-approved for. If you take your gross monthly income and you figure out 45% of that, well, that's going to be the maximum amount of debt that the lender is going to let you have. So they're going to take your taxes, your insurance, and any credit cards that you have, and that amount is going to be where they're going to cap you out at.
Okay.
That's the easiest way to figure out how much you're going to get pre-approved for. But if you're, one of the things that I think is overlooked by lots of mortgage people and realtors is the varying tax amounts by city and county.
Per county, or
yeah, it's one of the big differences, especially here in the Bay Area, is that when we're calculating what you're going to pay for taxes on the underwriting side, we're always going to use 1.25% of the purchase price. But depending on where you actually buy your house, that amount can actually be over 2% in some cases.
Wow.
So it's a big difference, and it's a good idea to not trust the realtor even so much as far as taking their word for it, what their taxes are. You have to do your own homework to find out, what the mill rate is in the city or the county that you're looking at.
Wow. And that is technically a question that your realtor should know, correct?
I think they should know that. That's one of the, when you're talking to a realtor, that might be a trick question if you're, asking about certain cities and counties. If a realtor tells you that, oh, it's about this, no problem, and you already know that there's a big difference between cities and counties, you might want to ditch that guy.
That's a great tip. So ditch your realtor if he doesn't know the county tax amount. Great. So when we're looking at, a mortgage lender, picking the right lender for you, what should you look for, and how should they go about working with the right person?
I think in this market, buying a house, you're going to be looking for a lender that's got the best execution, right? In this market these days, getting the best rate on the market may not always be what's going to get you into contract.
Okay.
Can
you just dive a little bit more into that for a homeowner who might be confused by that statement? Because we're thinking we need to get the best rate possible. So can you just a little elaborate on that?
Yeah. So these days, in the market where we have one house receiving 30 or 40 offers, and you have, we're trying to buy a house with a loan, and we're trying to compete with folks that have cash that can close the transaction in 7 days. We're really trying to close your loan as quick as possible, and that may not necessarily be with the lender with the best rate, unfortunately. I myself am looking for a house in this market, and I'm putting in offers, with a 21-day close, which is pretty quick.
Right.
You got to get a lot of stuff done in that time, and what happens is with the lenders that we're working with, sometimes that's not always the lender with the best rate, but it's going to be the difference between getting into contract and not getting into contract, if that makes any sense.
So, great. So you might have to sacrifice that interest rate for getting the house that you want.
Yeah, and usually it doesn't matter, but it doesn't really make too big of a difference. Usually when I'm looking at my fastest lenders, I may have to quote a rate of an eighth higher, and I'll always put that into the client's hands to make that decision. We work with about 40 different lenders here, but I can tell them, hey, look, you can write an offer with a 21-day close in this rate, or I can write you a pre-approval letter for 30-day close and get this rate. And more often than not, they'll say, look, I'd rather get into contract for sure with that little bit higher of a rate than to risk losing the house, because at the end of the day, that's what's most important when you're purchasing a house. When
yeah, because a lot of emotions. Right. So when we're talking about you work with several different lenders, what does that mean, and what does that mean to the homeowner or the person buying their first home?
Say that one more time.
When you say you work with several different lenders.
Oh, right. The different lenders, we have different conduits, right? So what we're doing over here as a mortgage broker, we're actually a mortgage broker / banker, is we're taking your information, your documents, and processing it into a file, and we're basically taking it to the lender with the best rate. So you can, on a given day, we're basically looking at all the different banks and all the rates that they're offering and getting you the best price on execution on that day, and it can vary. One day we might see Wells Fargo, for instance, with the best rate, and then tomorrow they fall out and Chase is maybe giving us the best rate. So it really is a teeter-totter sometimes. You know, and that's the nice thing about working with a broker versus a bank, is that you get access to maybe all 40 different rates and get to select the best one on that given day that's going to work for you the best, versus getting a pre-approval letter with just one bank. You only get to shop them, and if you want to take your loan somewhere else, you have to start the process all over again.
Cool. Thank you for clearing that up a little bit. When we're talking about, you know, first-time buyers, what are typically the loans that they tend to go with?
Well, these days, with all the increases in mortgage insurance prices with FHA, we've been seeing other private mortgage insurance options come available. So, you know, for me, I'd like to save my money and not come in with as little cash as possible. So you've got your FHA mortgage. It's pretty expensive mortgage insurance. But if you can come in with at least 5%, we have a lot of options for conventional loans with no mortgage insurance. So you'll see maybe a little higher in rate, but you won't have to pay mortgage insurance. And usually that's what people don't want to do, is pay mortgage insurance when they buy their first house. But
and how long? Sorry to interrupt you. How long does mortgage insurance continue for throughout your loan process? The entire, maybe fixed 30 years, or is it a shorter time than that? Or if you don't do anything about it, can it last the whole term of your loan?
Well, nowadays, FHA just changed their rules. So if you have a FHA loan with mortgage insurance, the mortgage insurance will stay with the loan for the entirety of the loan.
Okay.
On conventional mortgage insurance, the mortgage insurance you can petition the lender to remove it, usually after you've held the loan for 1 or 2 years, and when the current value of the property reaches between 75 and 80%, depending on the lender. So if you say you bought a house last year for $400,000 and you think that it's worth $500 these days today, you can contact the lender and tell them that you have the equity level that doesn't require mortgage insurance, and they may require you to get an appraisal to prove it, and then at that point you won't have to pay that mortgage insurance anymore.
Nice.
But there are programs these days where the lender will pay a lump sum mortgage insurance premium for you at close, and you won't have to pay a mortgage insurance premium every month.
And would you educate your buyers on that beforehand, Jay?
Yes, yeah. We usually try to show you all the different options. Like giving your down payment, I will show the month, maybe an option with an FHA where you pay the mortgage insurance forever, and then maybe a 5% down where you pay the monthly mortgage insurance, and then also 5% down where you don't pay any monthly mortgage insurance, and then I might show you, 10% down with a first loan and a second loan combo. So in the beginning, we're basically show you all the different options, and usually the reason why I'm doing that is to kind of point you into one direction. I'm usually saying that's all your options, but that one probably makes the most sense for you, but it's always up to the client.
That's just a really good point, and I think through all the interviews we've had in our home buying series, each professional has come in, and your goal is really to educate the buyer, and I think that's really important when choosing a professional to work with. If they're trying to confuse you, that's not the right person to work with. But if there's someone like you, Jay, who wants to educate and give them options and choices and describe those options and choices, that's probably the person that you want to work with.
Right. Yeah, very important that you know exactly what you're getting yourself into, and in the beginning, I think that's probably one of the telltale signs of whether or not you're working with a good person or not, is getting a sheet. I send my clients a sheet that shows them exactly what this is going to look like, not just rates and quotes. I send them title fees, transfer tax amounts, prepaid interest, prorated taxes. You really want to know what your bottom line is going to look like so you don't come into an escrow office, for your signing to find out what you have to pay for the first time. You want to figure that out before you get it pre-approved even.
Because that could make, the difference between finding your dream home and having it be a dream and a nightmare, right?
Sure.
Yeah. So, thank you for being on the show today, Jay. If our listeners want to learn a little bit more about you or how to get in contact with you, how could they do that?
You can go to my website. It's just www.jaysondhi.com. JAYSONDHI.
Okay. And, like the lesson that you taught us, get pre-approved, not pre-qualified, right?
Mm-hmm.
Thanks. That was a great tip. I appreciate it. I enjoyed you being on the show and all that you have to offer and all the education you gave our listeners. I hope that you have a great day.
You too. Thanks, Julie.
All right. Thank you, Jay.